The screen glows in the dark, not bright enough to guide you, but just enough to trap you. If you are sitting in front of the charts feeling like doing nothing is a form of losing, your biology is working against your strategy. When you reach for your phone before your feet touch the floor, scrolling through feeds of $20,000 days and fast account flips, you are training your brain to need constant stimulation. You stop looking for edge and start looking for relief from the silence of a slow market. To reclaim your edge, we are going to implement a strict step-by-step protocol designed to remove those triggers, enforce solitude, and build a routine that prioritizes effective execution over excitement. Before we start, you will need a tested trading strategy, a physical or digital journal, and app blocking software ready to be activated on every device you own.
This detox protocol is the bridge that moves you from reacting to every candle flicker to operating your system with the cold, steady precision of a machine. Step 1 requires an honest look at your history. Review your last 10 trades and identify every entry that wasn't part of your plan. Those it-might-work trades that you took simply because the pressure to act was building. These are the markers of dopamine-driven trading. It manifests as checking social media the moment you wake up, or clicking a button just to break the boredom of a flat market. This cycle is mechanical. It begins with a physical urge to act, which flows directly into a random trade. Sometimes that random trade is rewarded. When the market pays you for a bad habit, your brain develops false confidence. You repeat the impulse with larger position sizes until the setup fails and the account is devastated. You must learn to see this cycle while you are in it. If you cannot identify the moment an impulse triggers a trade, you will continue to fund the market with your capital. To break the cycle, we have to change the environment where you make decisions. Activate your application blockers. All social media hubs and profit-sharing forums are barred. Your screen should show your data, and nothing else. Comparison destroys discipline. Every time you see another trader winning, the pressure to catch up builds. That pressure leads to mistakes because you start trading to prove you're enough, rather than trading the setup in front of you. Avoid the trap of market research scrolling. Watching others win is not data. It is a distraction that conditions you to chase excitement instead of following your own process. This digital isolation serves as a defensive barrier. It keeps your clarity intact by ensuring your only influence is the price action on your screen. Now, look at your actual trading interface. Most traders have far more information than they can actually process. Strip the screen down to the essentials. Remove news tickers, unnecessary indicators, and any alerts that don't directly signal an entry according to your rules. Use the exact same routine, the same charts, and the same process every single day. The goal is to make the act of trading feel predictable and repetitive. Real trading is a slow and quiet process. If your daily process feels boring, it is a sign that you are finally operating a system rather than hunting for a dopamine hit. The hardest part of this protocol occurs during low volatility, when the market offers no clear direction. When you feel the urge to force a trade just to feel productive, set a 10-minute timer and physically step back from your computer. Your mind will interpret this silence as an emergency. It will tell you that you are missing out. Training yourself to sit through that discomfort is how you build the stamina to wait for high-probability setups. Doing nothing is a disciplined choice. It is an active posture that protects your capital during periods where you have no statistical edge. Finally, we must change how you measure the success of your day. Hide your daily P&L. In your journal, your primary metric should be rule adherence, a binary yes or no for whether you followed your plan. You have had a successful day if you executed your process flawlessly, even if the market took money from you. A failed day is one where you broke your rules to secure a feeling of winning, even if the trade resulted in a profit. Detaching your daily metrics from financial outcomes stops the spikes of greed and the crashes of regret. It replaces those reactions with the steady focus required for long-term compounding. This is your new environment, an isolated workspace, a simplified chart, and a tracking system that values discipline over dollars. As you follow this, the anxiety of FOMO will begin to dissipate. You will move into a state of slow, calculated execution. You now face a choice. You can return to the cycle of chasing feelings and watching your account disappear, Or you can commit to the boring routine that builds wealth. Decide right now. Do you want the hit of dopamine, or do you want the results of discipline? Mastery over the financial markets begins with the decision